best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and hey, gold getting slammed yet again. Looks like Bo Polney's cycle hasn't quite gotten here yet, but maybe soon. Let's talk with Jason Burack of Wall Street for Main Street, see what he sees happening here, and interesting news about currency swaps. Have currency swaps eliminated the need for quantitative easing altogether? Because quantitative easing, as you know, is a dirty word when it comes to maintaining the value of fiat currency. Jason, hey, welcome back.
Thanks, Kerry. I'm happy to be back.
Hey, so gold, silver, I mean, it's getting ridiculous here. You know, obviously the charts have really been slammed. Whatever support was left is gone. We're down below 1150 for gold. I haven't looked at the price yet today, and we're down into the 15s for silver. Nobody can make any money mining the metal at this point, other than mines where it's a byproduct, right?
Exactly, Kerry. And there's real world ramifications to this paper price being so low as it is, especially for silver, because silver is an industrial metal, and at least 50% of the annual global mining supply for silver is used for industrial purposes like solar panels and electronics and water filtration and so many other uses. There's thousands of industrial uses for silver, and I'm sure there's going to be even more than that going forward, because silver is one of the best high technology metals, and it just has so many good properties with light and heat and electricity and things like that.
Yeah, there's no question. Conductivity and reflectivity and you name it. Not to mention investment demand. And we do know that the Eagles, the American Eagles and the Canadian Maple Leafs continue to fly out of the mint at near record levels. Even though I talked with Ross Hansen, he said, last year was not a great year for Northwest Territorial Mint. I talked to other bullion dealers. Last year was not a good year for the bullion industry, but the government mints, the metal is flying out of there.
Yeah, and that just confirms, what my research also says is the people in the West, a lot of the people in the West have not been buying as much physical gold and silver maybe as they would have in the past, especially the retail crowd. A lot of the retail is either tapped out with cash or starting to throw in the towel. I mean, if you look at the comments on Facebook groups for gold and silver, there's people, true believers, people are starting to give up, or getting angry at any of the experts and turning on them and things like that, saying, even though this cost is so much lower than the mining production, it doesn't matter. The people can short the paper markets in theory down to zero. Doesn't matter if all the miners go bust, blah, 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 blah. So these are the type of, sentiment points and capitulation type of things that happen near the bottom. Now, obviously, I don't know exactly when the bottom is going to be, but I can tell you, though, like I said, from supply and demand fundamental standpoint, there's still very strong demand for gold and silver. It's coming out of the East. So the majority of it. So the demand growth, if you look at Kuz Jansen and Bullion Star's numbers, China is on pace again to buy about 100% of the annual gold mining supply by themselves. When you add in India and Russia, it's more than 100% of the annual gold mining supply. And that's in a market where the majority of above ground gold is not released to the market. And yet the paper price falls like a rock. And then you look at silver demand, the Indian silver demand has increased by 18% in the last 12 months or so. It's an enormous increase in the Indian silver demand. The Chinese silver demand is still pretty strong because they're producing a lot of solar panels in their country, and a lot of Chinese have started buying physical silver because I believe the word for silver in Chinese also means bank. So China has a long history. China, I believe, was on a silver standard prior to World War II.
Correct.
And then when they went off the silver standard, because FDR was he was subsidizing the silver miners here in the U.S. and the silver price was much higher in the U.S. and a lot of the silver was smuggled out of China and brought here to the U.S. for a higher price. And then that led to China basically hyperinflating too at one point.
Yeah, if you want to find out more about that, there is a book written by Milton Friedman and I guess Rose Friedman called Money Mayhem. And it goes into that, into what happened in China with subsidizing silver prices as a give me to the silver miners in the U.S. and the law of unintended consequences, the effect that it had on the Chinese miners. Fascinating. And that was before the world was so interconnected. So anytime government messes with a market, you're going to have unintended consequences. That's what I took away anyway.
Yeah, exactly, Kerry. And we've gotten to the point now where there's no incentive for silver miners to really spend any money for exploration budget. There's no incentive for them really. I'm in Keith Neumeier's camp. I mean, he shouldn't say this in public. He should negotiate this in private if he's going to do something about it with other silver producers. But they're at the point here where the silver price has been forced. The paper markets have forced it so low below the cost of production that not even the lowest cost producers on the planet, the Fresnios, the Pan American Silvers, the First Majestic Silvers, those are the lowest primary silver producers on the planet. They have a humongous amount of the total annual silver production for primary silver producers, and they can't produce the silver at a profit. So it's going to be very interesting here. There's not a lot of debt or equity available for a lot of silver miners. Obviously, if you're a larger silver miner with a relatively low production cost thing, you can maybe get by with the cash on your balance sheet or things like, or maybe sell a little equity if your liquidity problems. But some of the companies with worse balance sheets, they're going to go bankrupt in under 12 months now. So we're going to see the next 6 to 12 months, Kerry. We're going to see the mines starting to shut off because there's just not enough capital available for the higher cost marginal producers to keep the mines open at this point.
Yeah, well, it's very clear to me, without going into conspiracy theories, of which there are aplenty. Chris Martenson says it's just part of financial repression that you have to eliminate all investment choices other than where you want people to put the money. You lower interest rates to zero. So what are your choices? High risk investments. And you have to eliminate gold and silver as a choice there. So what the government wants here is a consolidation in gold and silver mining. It's really that simple. And how do you do that? You get those prices low and you will consolidate that industry big time. Government's great at doing that. Look at the defense industry. Just look at the banking industry. Go down the list. And every industry that has consolidated, it's been a result of direct or indirect government policies causing it.
Well, the mining industry, Kerry. Yeah, I'm sure there's parts of that, and there may be the Chinese either trying to buy some of these gold or silver miners out of bankruptcy if governments like the Canadian government will let them. Maybe Wall Street even will try to, after they've shorted the paper price here, because I know there's a good amount of floor traders on the New York Stock Exchange that know about the gold and silver manipulation, won't talk about it in public. They just go along with it, short the paper price, and buy metal with the profits. And they've been doing this for a while, and getting fat off this. But maybe at some point here, the people go long and they start buying up the quality assets in the mining companies. We'll just have to wait and see. But there's real world ramifications for the silver market because the silver market, so much of the silver is actually used for industrial purposes. That's why I think it's different than the gold market. Whereas the gold is not really used for industrial purposes. Yeah,
well, I'll tell you what. For the first time in many years, last year, jewelry demand in the United States was up. And if that's not a direct result of financial repression and manipulation of precious metal markets, then what is? So,
well, also the wealth effect too, Kerry. I mean, a lot of the people who can afford jewelry, right? They made so much money in real estate or bonds or their stock portfolio that you even saw this for a while with the luxury goods retailers, the Tiffany's and those guys. Yeah. And the high-end department stores, people are going in there and spending. They were giving the wife the American Express Black Card or the credit card there because the asset portfolio. But the people on the problem with financial repression that you mentioned is that the people on Main Street, they don't own a large asset portfolio. So the wealth effect, the financial repression, I call it worsening financial repression and the wealth effect are just all part of a worsening stagflation that the government needs to. They want inflation, they want to manage the inflation. Okay, they want a controlled inflation, but the person on Main Street, it doesn't benefit them because their food bill is going up, their energy bill. Yes, the gasoline price has come down in the last 6 months or something like that, but if you look at the gas prices, over the last 10, 12 years, they're not down at all. They're up a lot. So
the alcoholic would like to just enjoy one drink or two drinks, but the alcoholic can't do it, and neither can the credit addict, which is every level of society here is addicted to credit in one form or another. Let's face the facts. So it's going to wind up with a bad result that you can be certain of. So, hey, should you buy? That's a personal decision. Should you sell? I don't want to be the stop clock, but you have to look at why you bought it and are the reasons you bought it still true? And, for me, my faith in government, I don't know about you, Jason, but nothing they've done has made me feel any better about what they've been doing.
Yeah, it's getting much worse with the government with, spying on us and our civil liberties and things like that. The lies that have come out with there was an investigation into the Department of Labor, with Obama before the Obama election, how it was, they faked the employment numbers and so many other different things. We've seen just so many other different things and scandals and things like that come out. But yeah, in terms of gold and silver, Kerry, the only industries that can survive, running at a loss are wind, solar, corn ethanol, the biofuels companies, right? Because the government is subsidizing 100% of those. And as long as the subsidy's in place, those companies really, they don't care if they make it on their own because they're getting a big government check. But the rest of the other industries have to make a profit at some point.
Yeah, and government can survive running at a loss until the Ponzi scheme ends, and then it's over, and it's really over, and then you wish you had your gold and silver. Better to have gold and silver and not need it than to need it and not have it. And if you're looking to make your fortune on it, well, maybe you will, maybe you won't. But if you're looking at it as an insurance policy, I think it's far more important from that standpoint. Just a practical matter here, because no problem here has been solved. Let's face it, right?
Yeah, I completely agree. There hasn't been really any problem solved. The banking system, Kerry, has consolidated. It's even larger. It's even a larger too big to fail banking system.
Albatross.
And it's even larger. They've consolidated all the medium-sized and smaller banks into even larger ones. And the U.S. Federal Reserve is bailing out through the back door through currency swaps and other stuff. The European banks.
And when we return, let's talk about those currency swaps and what they mean and why the death of QE really is just an act of deception on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
Hey, in case you just joined us, we're talking with Jason Burack of Wall Street for Main Street and gold, silver, but more importantly, swaps, what it means for you, what it will eventually mean for the world economic system. And Jason, so we started talking about this last time. We couldn't quite get to it. We ran out of time. But tell us about these currency swaps. First, tell us what a swap is, and then tell us how it's used in the world financial system.
Okay, so a currency swap is where at a fixed exchange rate, one country trades their currency for another. So let's just use the U.S. and Japan. So the U.S. would print up, they would agree at a certain exchange rate, and then they would print the Japanese central bank would print up yen, the U.S. would print up dollars, and they would just swap them. And normally this is done where both countries don't don't need the money. One country normally is very desperate for the money. Normally, in this case, it's the country needs the dollars. So they don't have to, in Japan's case, with Fukushima, this happened right after Fukushima. There was an emergency currency swap done after Fukushima accident and all that other all the other things that happened after the earthquake and the tidal wave and then the Fukushima fallout. And Japan did not have to produce any more Sonys or Toyotas or Hondas in order to earn those extra dollars. So the U.S. just printed off, 3 trillion or 5 trillion or whatever the swap was, and Japan printed off their yen. The U.S. holds the yen that Japan gave it to them. They probably just call it reserves and they don't spend it because the U.S. doesn't need it. The U.S. has, the largest printing press in the world reserve currency. They can print dollars, and everyone, needs dollars. The way the world dollar standard is in place, and then Japan gets to spend the dollars on whatever things that they need. So that's basically a currency swap there. It's agreed exchange rate. The other country essentially gets a bailout, and they get all these extra dollars up front, and they don't have to produce any more goods or services to earn those dollars. Now, let me just tell you a story then about what I heard about these currency swaps. Normally in the past, Kerry, currency swaps were not very prevalent. They would once in a while be done in an emergency situation or something like that after a natural disaster, things like that. But I think the game changed drastically after 2008. But my story, though, it goes back to May, around May. And a friend of mine who's a local money manager in the DC metro area, he's a libertarian. I think he listens to my podcast. He may listen to yours. He reads Zero Hedge. I speak with him fairly often online. And he snuck into an IMF meeting here in the DC metro area, which is at the IMF building. And, sat in the back. Sat in the back, took notes. So there was representatives from all the major economies of the world, all their central banks, technocrats, Keynesian central planners, people there from the major treasury departments of all the world's major economies. So, China, Germany, India, Japan, US, Europe, they were all there. And basically, he sat in the back and listened to their presentations. And, these guys, they're not going to go, a lot of them on the record and on CNBC or Bloomberg and say, we know the system is collapsing and that we need to transition a lot more smartly to the next system. We don't want to be caught us off guard as much as we did in 2007 and 2008. But that's what he told me they said in the presentations, that the system is essentially dead and that they need to transition to the next one. And he said the majority of the presentations, the things that took him that he took in his notes, the things that were mentioned the most were currency swaps. So basically what's happening now is I think you had heard once in a while press releases, currency swaps with the U.S. or Europe, the European Central Bank and the Fed, or the U.S. and Japan. But I think everyone is now doing currency swaps with everyone else. And I think it's whether it's the developing world with other developing world countries. We've seen China recently do a pretty large, almost $1 billion currency swap with Argentina to bail out the Argentinian government for a little while longer and keep them going, because obviously Argentina has natural resources that China has investments in and wants. And when you see these bilateral trade agreements, Kerry, we were talking about this before the interview. You read the press releases for the bilateral trade agreements outside of the dollar. What most people do not notice, and you won't hear this on CNBC or Bloomberg, is that in those press releases for all of those things, well, they probably won't even talk about the bilateral trade agreements on CNBC or Bloomberg. But anyway, though, when these press releases are put out, they're pretty short, but they all talk about currency swap lines for like protection and liquidity and things like that, but they're not transparent. So they don't say normally how large the currency swap line is and if it's already being drawn and things like that. So this is, I would say it's another way of putting liquidity into the system without announcing it, as quantitative easing, that the Fed is going to create an extra $85 billion per month. For quantitative easing. Instead, what they can do is they don't even have to announce it. They could just do a currency swap for $1 trillion or $2 trillion or things like that. If it's the U.S. and doing someone, although China probably will do smaller currency swaps with Russia and things like that. And they're going to inject liquidity into their asset prices and banks and things like that way.
It's pretty sneaky, when you get down to it, right?
Oh, it's very sneaky. But the public backlash, though, Kerry, this is, the central banks are politicians. Alan Greenspan came out and said this. They're not independent. So they have to come out and do what the politicians want. And, politicians normally have no problem. Most politicians, Kerry, are very good liars. So the politicians.
You think? You really think so, huh? You sound like a real cynic there, Jason.
I think most politicians are pretty good liars. At least like they fool most of the people, or maybe the people, Kerry, are so lazy that they only vote for the two-party system.
I don't know. I think their lying skills have definitely deteriorated over time. Looking at our latest crop of liars, I mean, politicians, I think the skill level has really gone down.
Yeah. But especially with social media, Kerry, now when these guys end a little thing, they could get caught immediately. So they could try to lie it away, but social media, they can get caught in a lie immediately.
Yeah, and the memory, the internet has a great memory, and you just go back and you say, wait, you said exactly the opposite on such and such day, and here's what you said, and we have you saying it, and you've nailed them, and that's the beauty of it. So.
Exactly, Kerry. And I think there's websites too that track politicians.
Oh, yeah.
Flip-flop like that now. So yeah, there's more watchdog stuff out there. I mean, if most people want to do their research, but the whole thing, this story and the whole thing to take away from all this is that central banks, they were not really transparent before, but they're getting intentionally less transparent now going forward, and they're looking for, because of the negative backlash of quantitative easing and stimulus programs and how they haven't helped the people on Main Street get a job. And, the people on Main Street really, it hasn't boosted their asset portfolio through the wealth effect because they don't own a lot of assets. So what has happened is the central bankers still want the liquidity into the system for the banks, for their government spending, to boost their bond markets and other asset prices. But they're just looking for a way to do it in a less transparent way and more covertly than even a few years ago.
Oh, for sure. Yeah, for sure. So, hey, quickly, we only got like 2 minutes left. So oil is getting a stuffing kicked out of it, but effectively oil consumption continues to increase throughout the world other than the developed world, right?
Yes. And in my opinion, Kerry, this is the best time since 2009 for your listeners to go out there and buy profitable oil companies. There's a lot of oil services and drillers. Those guys are in an enormous bull market. The shale oil producers need to spend a lot of money in CapEx on drilling. So there's companies like Schlumberger and Halliburton and Baker Hughes who have order books for 10 years or longer. The deepwater offshore oil companies are at the biggest discount. I think your listeners can they can get good dividends in those types of companies like a Transocean Rig or Diamond Offshore or Seadrill. Seadrill has a little bit more debt on the balance sheet, but they have $8 per share earnings and a 17% yield. So and they can get paid. That's a pretty juicy yield to get paid away. Maybe the dividend gets cut a little bit, but it's an extremely profitable company that has a very large order book. So there's and I can name dozens of other examples of profitable oil companies, whether they're in Canada with 2 to 8% dividend yields, profitable companies outside the U.S. and the shale oil. There's just a lot of good, very well-run, profitable companies in oil with good balance sheets all over the globe right now. Unlike the gold and silver miners, Kerry, the miners did this to themselves, unfortunately, Kerry. A lot of these guys, they overpaid for acquisitions. They didn't report their costs correctly. They only reported the cash cost, didn't report the all-in cash cost, and it attracted the governments to go after with higher taxes and things like that. And they did bad acquisitions, and they mismanaged their capital base with bad debt and equity raises. So I think the oil industry is much better run. It's much more profitable, and it's safer for the conservative investor who can go out there and get much better yield and buy a profitable company. I'd much rather own profitable oil companies with a good yield than treasuries.
Yeah, agreed. All right, wallstreetformainstreet.com. Read Jason's work there, and link can be found as always in the show notes to this interview on financialsurvivalnetwork.com. Sign up for our newsletter, and we will be talking with you again shortly, Jason, because I just don't expect this bloodbath in gold and silver to continue much longer.
Yeah, I agree.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.